So, once again, what a great event that this is that Gail put together, because it's so important to know those next steps. My dad passed away just this past December, and it was quite stressful for my mom and all of us siblings, all the kids in the family. So, getting these things in order beforehand is really just such a gift to your family. So a little bit about me. Let's see if I can. There we go. Hopefully I can get that to work. So I own and founded a company called Full Circle Aftercare. We help closing out the estate issues of families after someone passes away. On the non-legal side, we work with clients in 38 states and now in Canada as well. We've served, this is a slide a little bit old, about 35,000 families. We're helping about 1,600 families a month at this point. And right now we are partnered with French Funeral Homes there in New Mexico. So they're offering our services. So I want to go start at this time. When someone passes away, I have talked to a widow, and this discussion with the widow is one of the reasons why I decided to create Full Circle Aftercare. She said that she had the services for her husband and the services went really well. And then at the end of the services, they got in the car and they were all driving home. And everyone in the car was talking about how beautiful the services were and what the pastor said and, what the flowers looked like. And she was agreeing with all of that. But also she had this overwhelming stress and pressure she felt on her shoulders of what's next. Now, what do I need to do to take care of my personal affairs, to take care of myself? What's this all going to look like? And that widow told me that was just completely overwhelming for her in that car ride. And it was also something she felt like she couldn't talk to a lot of her family members about, because she was a little bit more private with her children. So she felt like she was going to be facing those next steps alone. And that is not something we want anyone to do. So a few frightening statistics, because a lot of family members do deal with this alone. 82% of widowers and widows don't receive their full Social Security benefits. So we just had an excellent presentation about Social Security benefits. And a few years ago, they looked at that spousal benefit. They get the higher amount of their own or their spouses. They can also do a strategy where they can continue to work and claim their spouses while they wait until they get a higher amount later on for their full benefit. And between those two scenarios of either not being connected with their spouse or not waiting the proper amount of time, 82% in an audit 4 years ago found were underpaid with those spousal benefits after the loss of a loved one. This one's kind of sort of frightening. 2.5 million deceased identities are stolen every year. So now those family members are not only dealing with the grief of the loss of their loved one, but also dealing with having to clean up their identity theft, which can really be a struggle for most families. On average, it takes the family 14 to 18 months to close out the non-legal estate issues on a simple estate. So what is the simple estate? Well, that's an estate worth less than $10,000. So almost a year and a half to close out what? Not very much. Right? 44% of the families experience conflict while settling estate. And I'm not sure if that's, here's the next one. 30% of families stop talking to each other. Completely stop talking to each other when estate is distributed. That is so sad. That is something we never want to have happen. You have a loss of a loved one, and now the family falls apart. We want to keep families together. We want to help them walk through those next steps. So what needs to be done? What happens after someone passes away? Well, everything in your life, everything that touches that person's life needs to be addressed by the family member, right? And I just experienced this. I just moved and I thought, hey, I can put my stuff in boxes. I'll move to my new location. Oh, I need to update my address with the post office. Oh, but I also need to do it with my credit cards. Oh, also my retirement accounts. Oh, also my voter registry. Oh, also my driver's license. And it just keeps on going on and on and on. And there are still things that I haven't updated for months later. Well, take that effect, and when someone passes away, it's 10 times worse. You know, everything from utilities, cell phones, to online accounts, to subscriptions. Fact of the matter is, this list that I just put on here was about a third of the list of things that we see families having to deal with and closing things out. And I can't put it all in one slide, right? So it feels really overwhelming for families on those next steps. And so where do families go for help? Well, attorneys are a good option. Attorneys can help close out the legal side of things. They're not going to help with a lot of the things on those slides, but they are a very important option if you need that next step, and can really be helpful. So attorneys are definitely a part of an estate closing process. Sometimes financial planners are a very important part, because as money gets transferred, you don't want to create a taxable event. Right. So just when you talk to like a retirement account, they might say, hey, do you want to take this out in a lump sum? Do you want minimum distributions? Do you want to roll over this account? And knowing how that account was set up and what those implications are very important. So you're definitely going to want to talk to a financial planner to make sure that those things are transferred over. Sometimes friends or family can help with like some information. And even internet searches are important, because there are a lot of checklists online of what to do and how to do it. But there also, be careful, because a lot of people put out faulty information so that you end up reporting your deceased loved one's information to someone who has nefarious purposes, will sell that information. So it's an important to be very wary of who you're giving that information to. And then there's people like us. We're an aftercare service. So our aftercare service is a concierge service that goes through that checklist of what needs to be done. And we are basically trying to help the family make all those connections and make all those notifications. So the important thing when we're talking about what to do to make sure that your family's not left with all this mess is get organized. Right? Have a place where you write down your important documents and tell your family about it. What is the password to your email? What's the password to your computer? How do you unlock your phone? Those three right there, huge. Where do you bank? Right? Where do you have your money? Do you have investment accounts? Please write down if you have insurance, because there is no national registry of life insurance. So you might have been paying into an insurance account for years and years and years. If your family doesn't know about it, they'll never get to claim that benefit. So please have a place where you put all that information and tell your family where it is. Hey, it's in the safe under my bed, and here's the code. When I die, make sure you go through those next steps. Right? Okay, another thing to get prepared is legal, right? Wills and trust. Okay, so what is a will and what is a trust? Well, we own things in this world, and a will tells everyone what we want done with our stuff. So what's the difference between a will and a trust? Well, a trust is a legal entity that owns our things for us. Right? That's really important. So I'm going to get more into this a little bit later in the presentation. But the nice thing about a legal entity that owns our stuff instead of us owning our stuff is legal entities don't die. So there's no break in the link of ownership, and it's just a little easier to transfer those items to our loved ones. But so many families do the work of going to an attorney, setting up a trust, and then never funding the trust. The funded trust means that you actually put those items that you own in the name of the trust instead of your own name. You can have a trust in place, and if those items are not put in the name of the trust, when you die, you will most likely trigger probate. So we don't want to do that. So please talk to an attorney about a will or trust, or reach out to me afterwards. I can help you point to some either local attorneys or online accounts, and we can give you a 20% discount if you want something like a simple will. With third-party services, we don't provide that, but we send enough people over there that they give us a big discount for our families. Finances, really important to make sure you have a financial planner, someone who's helping you with that, and get your life insurance in order, like I said before. Write down the online accounts and passwords. The other thing is, if any of you use Chrome on your computer, it will save your passwords for you and keep those updated. And then just let your family know that. Because things like Facebook and Instagram and those types of accounts, it basically takes an act of Congress to get those things, to get those accounts transferred over to the family. But the shortcut is if your Facebook password is saved on your Chrome profile and your family has access to your computer, they can jump on that Chrome profile, open up the account, and open up Facebook, and boom, they're in. Now they have access to everything, and they can change that to a memorial account at that point, or have access to that account, or change the password. So that's something very helpful. Final wishes. Look, I don't think it's a good idea to go shopping at the grocery store when you're really hungry, right? I've done it before, and I have bought way too much food that I didn't end up eating. The same principle goes for planning a funeral. If you walk into the funeral home and there hasn't been a plan in place, and that family is grieving and they're trying to plan the funeral at the same time and make those decisions, that's really hard. Families end up spending a lot more money when they don't pre-plan a funeral, and a lot of times it causes so much contention. You know, one family member is like, well, mom deserves the very best casket there is. And the other family member says, well, we can't really afford that. And, you know, it just, we don't want to have contention. It's just such a gift if you can pre-plan that funeral beforehand. And I think that there's another presentation about that. Okay, personal property. This is really big. There's one company I suggest called Nemu. They have, it's MyNEMU, mynemu.com, and they are a place where you can list all your personal property and say who it goes to, or your family members can divide it up afterwards because they can do an emotional value on things. But I have seen a family torn apart by just stupid little personal property items. I saw two siblings sue each other over some nightstands, and they were antique and they were worth some money, but they spent just on one side of it, they spent $30,000 in legal fees. So that's probably close to $60,000 if you can count both sides in legal fees over these nightstands that were worth maybe $500 a piece. Families fight over these things because they just lost a loved one, and they are looking for some kind of connection to keep, I want to keep a piece of mom with me, right? And so one thing that I have seen, I had this one family who was fighting, and they were at each other's throats, and they were threatening lawsuits to each other. And then they found this notebook from their father. And in the notebook, he had just shared a couple items he wanted to go to each child. So he said, you know, to my son, Bobby, I want you to take the shotgun, because I remember going duck hunting with you, and what an experience that was with you. And we connected so well on that boat when you were 15, and he just told this little story. And then, you know, my son, Randy, I want you to have, you know, my car, because I remember teaching you to drive. And anyway, he just gave a little reason why with just one or two items for each child. And immediately when the family found that, all of the fighting stopped, because now that shotgun was like a piece of dad. He remembered me, he was connected with me, and that really helped that family heal and connect, and all contention stopped, fighting about the other stuff, because really people aren't fighting over the worth of items. They're really fighting over that connection with their loved one. So please just do a list of a few items for your heirs and a reason why you want them to have them, I have seen that really heal families. And any other personal messages you can leave for your loved ones. I've talked to so many families, and they'll find a video, something on the cell phone, some kind of a message to their loved ones. If it's a personal message, I know that seems weird, but just take a Sunday afternoon and speak your heart. Say, a few reasons of what you appreciate about that person. That is so healing at the time of loss. I can't even tell you. So these are a few items to get prepared beforehand. Now, what happens when death occurs? Well, there's a lot to go through. You already saw that big list, but a few items that are biggest concern, definitely Social Security benefits, probate, banking, and fraud protection. I don't have time to go through everything on that list, or we would be here all day and night, and it would be really boring. So I'm just going to hit a couple of these. I have a lot on here on Social Security benefits, but I'm going to pass those. I'm going to go through those quickly because you just had a big presentation about Social Security. If you have any questions, please don't hesitate to put something in chat for people online. Anyone in the chapel, tell Gail, and she can throw something on chat, and I'll be happy to answer those as well. And I can definitely go back. So, Social Security. We work with funeral homes across the country, and this is the number one thing the funeral homes tell me. We already help with Social Security. It's not true, right? For most funeral homes. I'm not going to say all, but what they think is helping with Social Security is that the fact that they make the notification to Social Security when they order the death certificate. That does nothing for the spousal benefits. So, if someone tells you that, oh, you don't need to do anything, I would be wary of that answer, right? So what happens from a funeral home? A funeral home's perspective is when someone passes away, they fill out a form called SSA 721. That notifies Social Security of the death and will stop benefits to that deceased person. That's something you don't need to worry about. It is taken care of. Now, last payment. This is something that nobody's going to tell you about that is very important. This is Social Security Form 1724. So let me explain how Social Security works. They pay you a month in arrears. So it's October, and the Social Security check you receive in October is not October's payment. It is actually September's. October's payment comes in November. So if you died on November 1st, what would happen is you would be due the payment for October. But Social Security, what they're going to do as soon as they get that death notification, they're going to maybe send that payment in November, and then they're going to pull it back out. And the funeral home's probably going to tell you, yeah, that's what needs to happen. They're going to pull that payment back out. That's not necessarily true. If you lived the entire month of October, you are due that last payment. But because you're now listed as deceased, Social Security can't just put that into your bank account. They need someone to claim it. So the final payment might still be due to the family, even if it's pulled back from the bank account. If you lived that entire month previous, you would be due that last payment. So you must claim it by filling out form SSA 1724. Okay, it's really easy online. It just needs to know who to send that payment to. Thousands and thousands of families do not get that last payment because they don't know about this one simple rule. And it's something that if you have lost a loved one, you might want to go back and claim that last payment if they lived the entire month previous. Payments could be as much as $3,300 or more, right? Okay, now for spouse. Like you heard before, you must link your work record. Social Security doesn't keep a track of who's married to whom. But when you claim benefits, you do. So a lot of people will hit retirement age and not necessarily link their work records. So in order to get spousal benefits, you must do that. You have to have an appointment with the Social Security office. You have to provide a marriage certificate. In some states, it's common law, but you must provide a proof of relationship. So you don't always have to have a marriage certificate. And more than one spouse can claim benefits, right? So you could have a man who passes away, let's say example, and his first wife and he were married for 15 years, and now he has a spouse, a current spouse who also needs that. So we would, in that case, they could both claim benefits as long as that first spouse had never been remarried and they were married for 10 years. They could both claim benefits on that one deceased person's Social Security benefits, but they must link their work records. Okay. And in order to get any kind of linking, you do have to actually be married for 1 year right at the beginning. So link the work records. That claims the additional payments. That means it's going to be the higher amount of yours or your spouse's. And if you're still working and you're not quite at that maximum benefit, like we talked about in that last presentation, you could still work, claim it on your spouse's, work, get your benefit to the very maximum, and then go back and claim your own. It's a really great loophole that's just for widows. Okay, there's also one-time Social Security benefit that's paid to any spouse. You have to fill out form SSA form number 8, and it's just $255. Some people claim that that used to be the cost of a funeral. I don't know if that's necessarily true, but it must be a surviving spouse. It is not payable to children or to other family members, right? And if the work records are already linked, that becomes automatic. So if you already know that you're getting benefits, like my mom, she was a stay-at-home mom. She did a little bit of piano teaching, but her Social Security benefits were less than half of my dad's. So when she applied for Social Security, she automatically linked their work records. So when my dad passed away, she got that $255 payment automatically. Okay. So we just talked about widow benefits. So I'm kind of going through this one quick, but it is important to mention. Children. So if there are any dependent children under the age of 18, then Social Security kicks in and pays a per child payment up to 2.5 children. I don't know how you have half a child, but they don't keep paying it for 6 children like I have. I have 6 kids. They only do up to 2.5. And they will pay that benefit to a beneficiary until that child gets to the age of 18 or graduated from high school, right? There is a maximum family benefit, so it can't just, like I said, I have 6 kids. That's only going to be listed at 2.5 kids. Disabled children, however, if they are disabled before the age of 22, they can receive Social Security for the rest of their lives. So before the age of 18, that disabled child's benefits are going to go to a guardian. After that point, they will go either those guardian benefits may stop, but they will get some kind of SSI benefits for the rest of their life. Elderly parents, this happens sometimes if an elderly parent is dependent on a working child and they're generally not married, and you've been claiming them as a dependent for some time. Sometimes if you die, they can also get an additional Social Security benefit. And this is sometimes typically happens in like a guardianship situation. It's pretty rare, but it does happen. Okay, so important things to remember about Social Security. Sorry, I went through that fast, but we just talked about it, and we're kind of talking Social Security to death here. Make sure the link work records and that we have an appointment there. Last payment application, make sure that you're applying for that last payment if it's applicable. Learn when you can and can't get benefits. And yeah, that should be taken care of with Social Security. Now, before I jump into probate, I saw that a question came through. So Gail said, a question from the audience. I have been told I don't need a trust. What's the best way to assume my estate does not go to probate after I die? Great question. So if you own real estate, then you need a trust in order to avoid probate. And I'm going to jump into that right now. What triggers probate? That's going to be my next section. Or if you have accounts over a certain amount. If you don't own any real estate and you don't have any accounts over $50,000 without a payable upon death, you probably don't need a trust. So that's good advice for whoever asked that question. So let's jump into probate. So to understand probate, we have to understand ownership, right? Now, ownership is kind of funny because in reality, for thousands of years, people really didn't own things, right? The government owned things. The king owned everything, and they would have stewards who were over certain parts of their land, and they would be able to take care of they would be able to use some of the king's land or lords over certain parts of the land, but it was really the king's property of everything. And it really wasn't until, you know, the United States came along that we started coming to this concept of people can own land themselves. And the government's job isn't to own all those things. The government's job is to protect that ownership. And so what are the things we can own now because we live in our country? Well, we can own personal property. And we know we own personal property mostly because we possess it. But if it was in dispute, we might want to show like a receipt or a bill of sale. We can own real estate, right? And real estate, we know that by a deed or title. Isn't that interesting that, you know, they used to give title to land beforehand, like that was what made someone a lord or a duke or a duchess. And we still use that same term. We can use vehicles. We can own vehicles. And once again, that's owned by a title. We can own a contract or an account or agreement or even a policy. And those are going to be set up by a contract. We can own a business, and we own rights. And the government's job is to protect our ownership of all those things. Well, by protecting ownership, that also protects not what we own today, but also how we pass that on to our loved ones after we pass away. Oh, here we go. I already said this. Bill of Right, possession, title, contract, articles of incorporation is what says who owns a business, right? So what happens when we die with all those things? Well, for personal property, it's really possession. I mean, that's what it is. If you can track who has that personal property when you pass away is who gets it. But a will really helps family members who are trying to divide that up know who those things go to. Now, nobody wants a will that sits there and spells out this pencil goes to this person and this paper clip goes to this person, right? Obviously, that's too much. But you do want to have something about the personal property on a larger scale, which we kind of talked about beforehand. Real estate. Real estate in some states can go to a beneficiary, or it's going to be probated. And I'll jump into that just a little bit in just a second. Contracts and agreements. Now, very seldom do those get probated, like policies, life insurance policies. They're just going to go on who owns that policy. So, for example, I helped this really sad situation where someone got originally married. They put the family farm into the name of them and their spouse. And then they got a big life insurance policy to help run the farm to the name of their spouse. And in this case, the wife left the husband and she went off with a former boyfriend and lived down in southern Florida for a while. The husband finally got remarried and started a family and kept that farm going for several years. And about 20 years later, he had an accident and passed away. Well, unfortunately, he never updated the title to his farm, and he never updated the life insurance policy. So the ex-wife, who none of those things got updated, she ended up getting both of those because her name was on the title for the farm, and her name was the beneficiary for the life insurance. Now, there was a lawsuit over the farm because some other things had happened there, but there was no lawsuit over the life insurance because once whoever owned that policy is who owns that policy, and it was the ex-wife. So make sure that those beneficiaries are updated. For a business, beneficiary there's either a beneficiary within the business, or businesses have to be probated, right, to know who those go to. So What is probate? Well, probate is where the government tells you because they're in charge of helping us own property and protect our ownership rights, they transfer that property from one deceased individual into another person's name, right? That's what probate is. So it's a judge looking at what your items are, and then they transfer that. So if you die without any plan, then your estate is considered intestate, which means there's no plan. So the judge looks at it and they have a plan put in place, like it should go to this person, then this person, and this person. And they basically divvy those assets and move the title of those assets to the surviving family members. So what triggers probate? Well, real estate triggers probate. So this goes back to that probate question. Who needs a trust? Real estate triggers probate. Businesses trigger probate. Unsettled affairs can trigger probate. Estate value over the state limit. And off the top of my head, I don't know what New Mexico's is, but typically they're between 50 and 100,000. So why does real estate trigger probate? Let's talk about that. There's a couple different ways to own probate. To own real estate. To own real estate, like I have a home, right? Now, if I bought that home for just me, then I would be a single owner. I would own it 100%, right? Or the way that I actually bought my home is I bought it with my wife. My wife and I bought the home together. And you might have heard that before, joint tenants. In fact, on our title, it says Matthew and Marquesa Van Drimmelen, husband and wife as joint tenants. What does that mean? It doesn't mean that she owns 50% and I own 50%. It means together we own 100%, right? Which is different from divided ownership, which is called tenants in common. And that one is a percentage, right? That's where I buy an investment property with my brother-in-law. I put in more money at the beginning, so I own 70% of the property and he owns 30% of the property, right? Okay, so what happens with each one of these? If I die as single owner of a piece of property, well, there's a chain of title. So when the government first released land to the public to own it, there was a little description, a legal description of what that property is, and that property was owned by this person, and then they sold it to this person, and then they sold it to this person, and then they sold it to this person. So I don't know if you remember, if any of you've bought real estate, when you had to go to a title company and they charged you title insurance. The title insurance was to make sure they went back and they researched that chain of title and made sure that there was no funny business, that when you're buying that piece of land, you really own it. Because back in the day, people used to run scams, right? I would sell my house to Gail and say, Gail, here you go, you can have my house. But then I would hurry and go and sell my house to Tom as well. And then they would have to sit there and fight with each other before they could figure out whose house it actually was. In the way, I got double paid on the property and I was off to Mexico. So a title insurance goes through and makes sure that you haven't sold it to anyone else, no one else has claim on that property, and it just there's that unending chain of title. Well, if you're dead and someone goes to buy your property, they're going to look at, okay, who's the owner of this property? Well, the owner's Matt. And Gail wants to buy the property, but in order for the property to be transferred to her, Matt needs to sign the title. He can't because he's dead. And so the only way for that property to transfer from Matt to Gail is for a judge to intercede and say, Matt's passed away. So now the person who can sign that over is his wife, Marquesa. Marquesa is signing that over to Gail in a sale. And now that with the judge's power, he's able to make a new link in the chain and sell that property. So every time it's a single owner property, it will trigger probate every time. There is no other exceptions, unless you're in a state that has a certain law where you can do a ladybird deed, basically. In that case, you have a beneficiary to your property. if that makes sense. So, what happens if you own it jointly? Well, my wife and I bought our house together. My wife's name's Marquesa. So if I died in a plane crash tomorrow, then my property would go to her, but she would now go from a joint tenant situation to a single owner. So if before she died, she could go sell our house and they would look at that chain of title and they'd say, okay, Matt and Marquesa own 100% of this. Matt's dead. So here's the death certificate showing he can't sign, but Marquesa's still on the title. She can sign for 100% of the ownership. She can sell it. It becomes a single owner. If she and I both die, then it would trigger probate, right? So a lot of times what will happen is one spouse will pass away, they're joint tenants, it doesn't trigger probate. When the second spouse passes away, because now they're a single owner of real estate, that triggers probate. Hope that makes sense. Tenants in common, however, automatically trigger probate because they are a single owner. So instance where my brother-in-law buy a piece of property, he owns 30%, I own 70%. If he dies, his 30% goes to probate before it can, because there's no one to sign. Jason can't sign that title because he's dead. So for that 30%, we have to have a judge come bring in a new link saying that now goes to his wife or to whomever he wants it to go to. And then we can sell that other interest. So tenants in common will trigger probate, often in investment properties, and single owners will trigger probate, but husband and wife or joint tenants of any type, doesn't have to be husband and wife, I just use that as an example, will not trigger probate. I hope that's as clear as mud. I hope it's a little clearer. Okay. So exceptions to this. How do we avoid that probate discussion, right? We don't want to trigger probate. So how do we avoid that bottom left corner? Well, don't die. My mom used to say this constantly to my dad. My dad loved to cliff jump and do a lot of risky things. And anytime he would do anything crazy, my mom would just scream out, Dave, my dad's name was Dave. Dave, don't die. Whatever you do, don't die. And that's a good plan. Except, unfortunately, we're all mortal. So we will die. So that's probably not the best plan, actually, of not dying. If you live in a state or if you have property in a state that has a homestead act and has a ladybird deed, then you should do that because it's very simple and it doesn't trigger taxes and it's a great way to transfer property and without going to probate. Now, businesses can't die. Isn't that cool? It's a legal entity. You can't kill a business. You can have it go out of business. You can stop paying. You can stop registering that business and then it kind of goes away. But businesses don't die. So if there's a plan in the articles of incorporation, what you could do is like my dad's properties, he had a couple rental properties that he and his dad had actually built back in like the 1970s. And we moved those to LLCs. And then in the LLC, we said that if Dave passes away, this will go to his children. So when he passed away, that went to us and we didn't have to go through probate. Right. So that's the nice thing is businesses don't die. Once again, this isn't the situation with a trust. The trust is a legal entity. So when you talk about that unbroken chain, right, the trust, Matthew Van Dremelen Trust owns the house. I don't own the house. The trust owns the house. Well, within a trust document, it's going to tell me who that trust goes to when I die. So when you're sitting down across the table at a title company, they're going to say, okay, this goes down to Matt Van Dremelen. Well, he's dead. Well, Matt Van Dremelen doesn't own it, but Matt Van Dremelen's estate does, or trust does. And who does it go to when the trust passes away? Well, it goes to his daughter, Eliza. So now Eliza can now sign for the trust with the death certificate without triggering probate because the trust was a link in that chain that never died. So that's why trusts don't trigger probate. I hope I'm explaining that well. Sometimes in a presentation like this, I get a lot of nodding, and some people are looking at me like I don't know what he's talking about. So I feel bad I can't see any of you, but yeah, please feel free to ask questions if you have any. Okay, let's see. Check on time. Unfunded trust. So if you have a trust but you didn't move that real estate into the trust, then it still triggers probate, right? Same thing with the business. And a will doesn't avoid probate. A will only says what these personal items are. Now, if you have very little money, then you can use something called an affidavit of small estate. An affidavit of small estate will allow you to transfer property if it's under that $50,000 limit, right? Okay, so we'll kind of skip over this, the state limit. So here's the small estate affidavit, right? So for smaller estates, you can use this. This is in lieu of probate. You don't have to trigger probate in order to close out the estate issues. So you can take this into a bank account and say the bank account has $10,000 in it. You don't have access to that bank account. Nobody's a co-signer on that bank account. We'll wait till everything comes through, make sure everything's closed out, and then you take an affidavit of small estate into the bank, say that these are the beneficiaries. They will close that account, write a check to the beneficiaries, and you're done. You don't have to go through probate on that. So it circumvents probate. It cannot be used if probate's triggered. If you're already in the middle of probate, you can't use that for the bank account while everything else gets probated. Once the estate is in probate, the entire estate is in probate. So you have to wait until that probate settles to even like close out a simple bank account. And once again, the affidavit of small estate is used for bank accounts typically. There's another one, affidavit of motor vehicle, that's used for motor vehicles. Oh, looks like we have a question. So the only way to avoid probate as a single owner of my home must be I sell it before I die. No, good question. You can put the ownership of your home into a trust. As a single owner of your home, you can put it into a trust and then name the beneficiaries who you want that home to go to when you pass away. This brings up another question. And that other question is, well, if I don't have to, could I just quit claim the property right before I die, right? Sell it to my kids for $1. That is something you don't want to do. And let me explain. When you buy a piece of property, the money that you spend on that property is called your principal, right? And as that property goes through time, as we all know, real estate values have gone up a lot. So the property value goes up. Well, the difference between the principal and the current value is your gain. Well, when you sell a piece of property for a gain, then whoever gets that gain, which would be you would have to pay capital gains taxes. That's what it means. Capital gains, you had a gain, you have to pay taxes on that. So if grandma bought her home in the 1950s for $20,000 and that home is now worth $250,000, and she quit claimed that property to her grandson right before she died, when he sells that for $250,000, he's going to pay taxes on that $230,000 gain. However, if it was in a trust and he inherits that property, now because it's below the $11,000 threshold of estate tax, he will pay $0 on taxes, and his principal will not be $20,000 that she paid. His principal will be $250,000 of what the current market value is when he inherits it. So it's a huge benefit to inherit property, not to be gifted or sold property, because it saves so much on taxes. But in order to inherit property without probate, you want to make sure it goes through a trust, typically, or a business. I hope that So probate takes a long time, it's expensive. Small estates use affidavit of small estate if there's no real estate. Married couples usually don't trigger probate, but after that they can. Trusts avoid probate if they're funded. You have to make sure your stuff is moved over to the trust. What was that question? I assume I can only put my house in a trust if I own it free and clear. No. What happens if I still have a few years left on the mortgage? Great question. Almost every mortgage company out there, I've never heard of one that doesn't, unless it's like a private mortgage, will allow you to move the home into a trust. So they'll require the trust documents showing that you are the owner of the trust. Then they'll move the home. You can move it over. They'll move the mortgage into the trust. You can move a home over even if you have a mortgage on it. Very, very good question. Thank you, Carol, for asking that question. Okay. So real quick on banks. I got about 6-7 minutes. Do not go to the bank when someone passes away. So my wife teaches ballet, local ballet studio. When she heard that the owner of the ballet studio, Clyde, her husband had passed away. So she calls me up and she's like, Matt, will you help close out? Will you help Clyde with dealing with Spencer's affairs? And I said, sure. So I get her phone number. I call Clyde and I'm like, Clyde, this is Marquez's husband, Matt. And I don't know if you know what I do for a living, but I close out estates. And I would love to help you with Spencer's affairs. And Clyde's like, oh, Matt, I can't talk right now. I'm just at the bank. Can we talk about this later? And I was like, Clyde, turn around, walk out the door. And she's like, no, I'm next in line. No, Clyde, turn around right now and walk out the door. And she's like, well, oh my goodness, okay. And so she goes out and she goes, what is it? And I was like, were you going to tell them that Spence just died? And she's like, yeah. And I was like, well, let me tell you what they're going to do. They're going to freeze all of your accounts. Everything. And she's like, well, they can't do that because I run my business out of that bank and I wouldn't be able to make payroll and I wouldn't be able to accept payments for the month. And I'm like, that's right. And it will be frozen probably for quite some time until all the affairs get settled. So people have this fear when someone passes away, I need to run down and tell the bank right away. Do not do that. Wait until everything else clears. Return of premiums, all the aftercare process of closing out all the accounts, all that happens. Make sure everything gets cleared. Then go down to the bank and use an affidavit of small estate to close that out. Because once it's closing, once it's frozen, you're not going to have any access to that bank. And if you have a check that comes back in the name of your loved one, you won't be able to deposit that. So don't go for at least 3 to 6 months or until you're sure that everything's been closed out. Okay, joint accounts versus single account owners. Single accounts, you're going to have to use an affidavit of small estate. You're not really going to have much access to that. A joint account, you can typically still use that account for withdrawals and deposits because you're a signer on that account until you're ready to completely take their name off of it. Most accounts, if you don't have this, go down to your bank and ask them to add a payable on death, right? A POD. Some people call it a PUD. Yes, great point. Gail said, if the bank account's in a trust, there's no problem. That's exactly right. If there's a trust, you don't have a problem. And so that's another good reason to do a trust, right? Okay. Joint signers. Now, this is an important part. A lot of people will do this as they get elderly. If it's just them, they'll put one of their children as a joint signer on the account to make sure that the bills still get paid after they pass away. So those things can still happen until they're ready to close out the account. And that's something that's really helpful to do that. So credit cards. Real quick, canceling single owner accounts is important. You definitely want to close those cards. If it's a joint account, however, you may want to keep that open, right? Because those joint accounts you might not be able to qualify for the same benefits on a joint credit card account. So what you do on that case if it's a husband and wife situation, husband dies, you just shred his card, right? You can still have access to your card and you'll be able to keep all the same benefits that that account was set up with. And the estate is responsible for debt, but family is not. So only the estate is responsible for death. Life insurance is not a part of the estate. It's outside of that. So I'm going to skip over the protection part because I am out of time. Thank you so much for your time. Our services are included with French Funeral Homes. So they're paying for our service for every family that uses them in the New Mexico area. We also have some funeral homes in Eastern and Northeast New Mexico who are now paying for our services, and a hospice that's coming on board who's also going to be paying for our services in Southern New Mexico. So if you want a list of those clients, let us know. You can come to us directly as well. But yeah, are there any questions before I wrap up?
A little clarification on trust avoiding probate.
The question is, do trusts avoid probate?
If funded.
If funded, yeah. So what that funded means is the name, like my house has to not be in mine and my wife's name. It has to be in Matthew and Marques's family trust name, right? If I have a real estate investment property, it has to be in the trust name or in a business name. If I have an investment account that is over $50,000, I need that in the trust name, unless it's a retirement account. Retirement accounts are something different, right? But just a regular investment account or bank account, I would need it in the trust name, right? So put all your accounts in the name of the trust, and then it will avoid probate. You are set.